And I remind you that the blue line here is the pivot line. So as long as the British pound is trading below this line, the weekly bias is to the downside. Above this line, the weekly bias is to the upside. Here we can see that the pair is consolidating around this pivot line located at 1.2930, and we see supports and resistance levels provided by this indicator. So you may use these levels as reference levels for your trading positions as well. Usually when the pair is breaking the first resistance or first support, you can use the other two resistance and support levels as your targets. This is how these levels work. And now let's check other currency pairs, because here the price action is also rather interesting. Let's have a look at euro dollar, and let's have a look at the weekly chart of this currency. Here we have an interesting picture. It kind of resembles what we see in British pound actually. And if the week is closed below levels around 109, then we'll get a bearish engulfing pattern on the weekly chart of the euro dollar, and we'll likely see the pair close this bullish gap and aim for levels around 107. Let's put the Ishimoku indicator here as well for our technical references. And here on the weekly chart, we can see that here as well, the Ishimoku cloud acted as a resistance. It switched from bullish to bearish. Now it is bearish. That cloud has narrowed, but the current cloud, which is near the current prices, still acts as resistance. The pair also is now below the weekly moving averages. One is located at 109.90, and the second one is located at 108.87. So keep attention, keep looking at these levels, because they really are important. On the daily chart, we still see that the pair has this upside bias. It is trading in the rising channel, but it reversed down from the upper border of this channel and is now moving lower. Here we also have important moving averages we need to be aware of, and here have a look at the 200-day moving average located around 108.25. This 200-day moving average earlier several times acted as good support and resistance. Here, for example, in March it was resistance. Resistance in November. It provided support several times during the months of August and September. And earlier this line was also respected by the market. So pay attention to this level this time as well. And below this line, we'll watch levels around 107.40 and levels around 107 and 106.80. So decline below 108.25 will mean that the picture has become significantly bearish. And this will be a rather safe bet to target 107.40 and 107 marks. All in all, we can see that the current technical picture kind of opens the way for further correction of the pair to the downside. Yet the fundamental picture for the single currency is not that bad, really. Here I'd like to point out that there are reasons to expect that the euro will be able to find support on the dips, support on its declines. Higher oil prices once again increase expectations that the central banks and the European Central Bank in particular will taper its monetary stimulus and move to the more normal monetary policy. So as now we have a significant reduction in political risks in the euro area, we know that French presidential elections were won by Emmanuel Macron, a centrist who is a pro-European policymaker and who wants to deepen the European integration. This is certainly positive for the euro and will increase the market's confidence in the European market and in the European currency as well. So this is one of the positive development. The market has priced in such outcome, and this was one of the reasons why the euro dollar descended from levels above 1.10, where it found itself at the beginning of this week. So this is why euro corrected to the downside, but the market will likely return to the idea that the picture in the euro area has significantly improved. The euro area's economic data are also rather positive. They show that the European economy is resilient and is recovering. So all these factors will likely make the market to expect European Central Bank's monetary policy tapering, and this is a good source of fundamental support for the euro. For now, we have another factor which makes the pair decline. This is the factor from the American side of things, and it is the expectations of the Federal Reserve's June rate hike. But still, much of this is already included in the current price of the pair, in the recent decline of the pair. So I would encourage you to be attentive, to follow the developments, and to be conservative if in your targets on selling euro dollar. Levels around 107.40 would be very comfortable if we get a dip below 108.25, but I wouldn't risk lower levels here, and as we may get a rebound from the lower border of this upside channel.